Hello learners, now we have to discuss about account standards. We have to discuss about account standards. What are the different type of account standards and what are the different aspect of account standards? We have to discuss about. We have to discuss. Okay. Okay, learners. In India, we may classify the account standards into three categories. First one is account standards AS, and second one is Indian account standards Ind AS, and the third general category is International Financial Reporting Standards IFRS. The new name is IFRS, but the older name is IAS. The new name is IFRS. Okay, the new name to IAS is IFRS. Now we have to discuss about AS, Ind AS, and IFRS. Okay, learners, if you are a sole trading concern, you can follow AS. Then you should not follow Ind AS. You may follow Ind AS, no problem, but there is no mandatory element to follow Ind AS. If you are running a sole trading concern, there is no compulsion from Government of India to follow Ind AS. Likewise, if you are a partner and you are carrying a partnership business, there is no mandatory element to implement Ind AS in your concern. There is no compulsion from the Government of India to follow Ind AS. You may follow Ind AS, no compulsion, but you have to follow AS. But if you are a joint stock company, you must follow Ind AS. Then there is a compulsion to follow Ind AS. That means sole trading concern and partnership firms may or may not follow Ind AS, but if you are a joint stock company, you have to follow. You must, you should follow Ind AS. Okay. Then, what is account standards? Account standards in India may be classified as AS by Institute of Chartered Accountants of India, Ind AS, and IAS or IFRS. Then what is AS? Account standard. Account standard means the basic objective behind account standards. To provide the basic objective behind account standards is to provide a framework for the recognition, measurement, presentation, disclosure of expenditure, income, capital, drawings, asset, liability, etc. of an enterprise. Account standard put together provide a framework of norms as to recognition, measurement, and disclosure on the part of all enterprises that follow them to ensure comparability. Okay? Then the basic function of account standard is to provide a framework for recognition, measurement, presentation, and disclosure of asset, liability, capital, drawings, income, and expenditure. Whatever may be the account standard, whether it may be AS, whether it may be Ind AS, whether it may be IAS, whatever may be the account standard, the basic objective of every type of account standard is to provide a framework for the recognition, measurement, presentation, and disclosure of liability, asset, capital, drawings, income, and expenditure. Okay. In India, there is a Companies Act in India, Companies Act 2013. Actually, now Companies Act 2019, Companies Amendment Act 2019. Okay. As per Section 133 of Companies Act of India, the central government may prescribe account standard. Okay. Central government may prescribe the account standards as per Section 133 of Companies Act 2013. The Institute of Chartered Accountants of India will formulate account standards, and the central government will implement the account standards after consulting National Financial Reporting Authority. Okay. Then as per section 133 of Companies Act 2013, Government of India may prescribe the accounting standards on the recommendation of Institute of Chartered Accountants of India after consulting National Financial Reporting Authority. That is a feature in India. Okay. Then what are the difference between AS, Ind AS and IAS? IAS is International Accounting Standards. Ind AS is the Indian version of IAS. AS is our traditional accounting standards. AS is our traditional accounting standards. IAS is International Accounting Standard. IAS or IFRS. Ind AS is the Indian version of IAS or IFRS. If you are a joint stock company, you have to follow Ind AS. In India, there is no compulsion to follow IAS. In India, all joint stock companies has to follow Ind AS, the Indian version of IAS or IFRS. Okay. AS is our traditional accounting standard. In India, the company's Indian Accounting Standard Rule 2015 and subsequent amendment to rule made Ind AS applicable to certain entities, leaving AS applicable to other entities. If you are a company, you have to follow Ind AS. If you are a sole trading concern, you may follow AS. If you are a partnership firm, you may follow AS. That's the picture. Then, what are the different type of accounting standards? The different type of accounting standards are AS, Ind AS, IFRS. In AS, there are a lot of accounting standards like AS1, AS2, AS3, etc. We may discuss about some of them. AS1, disclosure of accounting policies. AS2, valuation of inventories. AS3, cash flow statement revise. AS4, contingencies and events. AS5, net profit or loss for the period. AS6, depreciation accounting. AS7, construction contract. AS10, accounting for research and development. And AS9, revenue recognition. AS10, property, plant and equipment. AS11, the effective changes in foreign exchange rate. AS12, accounting for government grants. AS13, accounting for investment. AS14, accounting for amalgamation. AS15, employee benefit. AS16, borrowing cost. AS17, segment reporting. And AS18, related party disclosure. AS19, leases. AS20, earning per share. AS21, consolidated financial statement. AS22, accounting for taxes on income. AS23, accounting for investment in associate in consolidated financial statement. AS24, discontinuing operation. AS25, interim financial reporting. AS26, intangible asset. AS27, financial reporting of interest in joint ventures. AS28, impairment of asset. AS29, provisions, contingent liability and contingent asset. AS30, financial instruments recognition and measurement. AS31, financial instruments presentation. AS32, financial instruments disclosure. All corporate entities has to follow accounting standard. In India, all corporate entities has to follow Ind AS. If you are non-corporate entities, then you have to follow AS, not Ind AS, not AS. If you are level 1 entity or level 2 entity or level 3 entity, you have to follow our traditional accounting standard, that is only AS, not Ind AS. Okay. Now there is an institution that is known as National Financial Reporting Authority. Now we have to discuss about National Financial Reporting Authority. Students, National Financial Reporting Authority is a body constituted under the portions of section 132 of Companies Act 2013. The constitution of this authority is effective from October 1, 2018. What is the objective behind the formation of National Financial Authority? What is the role of SEBI in stock exchange? The role of National Financial Reporting is same as the role of SEBI in the capital market. SEBI is a regulating agency. Likewise, National Financial Reporting Agency is a regulatory authority in the field of accounting standards. Now, the government may prescribe relevant accounting standards after getting recommendation from Institute of Chartered Accountants of India and after getting consultation from National Financial Reporting Authority. That is the relevance of National Financial Reporting Authority. It is a regulatory body. It is a supervisory body. It is a monetary body. Its most important function is to monitor the auditor. Its another important function is to help the government in the formulation and implementation accounting standards. It is an independent regulatory body. Its function is to assist in the frame and enforcement of act relating to accounting and auditing. Okay. National Financial Reporting Authority helps the investor and public. Okay. Then Companies Act requires, Companies Act 2013 requires that the National Financial Reporting Authority to a chairperson who will be appointed by central government and maximum 15 members. Then what are the qualifications of members of National Financial Reporting Authority? First, they should be having an expertise in accountancy, auditing, finance or law. They are required to make a declaration. They are required to make a declaration to the central government that there is no conflict of interest or lack of independence in their appointment. All members, all 50 members, including chairman, who are in full-time employment should not be associated with any audit firm. Okay. Now, the central government may prescribe relevant accounting standards after getting recommendation from Institute of Chartered Accountants of India and after getting consultation from National Financial Reporting Authority. Okay. Now, there is an agency between central government and Institute of Chartered Accountants of India. That agency is known as National Financial Reporting Authority. Okay. Now, we have to discuss about IFRS, International Financial Reporting Standards. Okay. Ind AS is the Indian version of IFRS. First of all, before understanding about IFRS, you have to understand about IASB, International Accounting Standards Board. International Accounting Standard Board is an accounting standard setting body. It is an independent, privately funded accounting standard setter based in London. Its headquarters is situated in London. Contributors include contributors to IASB, International Accounting Standard Board, include major accounting firm, private financial institution, industrial companies throughout the world, Central and Development Bank, and other international and professional organizations. Okay, learners, now more than 140 countries have mandated IFRS in their accounting profession. IFRS are now mandated for use by more than 140 countries, including the most famous European Union and by more than 2/3 of G20 nations. The G20 and other international organizations, including the World Bank, IMF, Basel Committee, etc., have consistently supported the work of the IASB and its mission of global accounting standard. That means now IFRS are mandatory. Now IFRS are mandatory at the world level. More than 140 countries recognize the relevance of IFRS and they made mandatory. They made international financial reporting standards as mandatory in the accounting work related to the business organization of their country. Like G20 nations have also recognized IFRS, World Bank, IMF, and Basel Committee also recognize IFRS. Then, what are the features of IFRS? We have to understand that what are the features of IFRS. IFRS, International Financial Reporting Standards, are global accounting standards. These standards are principle-based and not rule-based. Our traditional accountancy is rule-based, but International Financial Reporting Standards are principle-based. Likewise, International Financial Reporting Standards are developed and maintained by IASB. These are issued with the intention of applying these standards across the globe on a consistent basis. But in India, we have implemented an Indian version of IFRS that is known as Ind AS. We may continue our discussion in another class. Okay.